Hello everyone, this is Group 7. Now let's start our presentation. The STEP framework has been around for a number of decades. This framework can be used to capture and explain what is happening or likely to happen in the business environment. STEP refers to social, technological, economic, ecological, and political, respectively, where factors are given no higher priority than others. This framework provides a way to account for changes in terms and forces outside the company that may affect the company's operations and the company's markets. Using this framework to analyze the external environment allows the company to react to the current situation and changes in the external environment. This research report focused on the impact of political external factor on companies. Political factors mainly include national politics, international politics, and the internal and external laws or policies that affect business operation. In the news we referenced, Sliver Funds, New Zealand's largest meat processor and marketer, signed the country's largest deal linking working capital to sustainability goals, setting sustainability performance targets that gives the company a clear idea of what it needs to invest in each year and clarify its responsibilities. The chief financial officer says that performing well on the achievement of sustainability goals save them money, while underperformance cost them.
Well, accompanied with a rising awareness towards environmental protection, more companies have linked their development objective with sustainable development, which summarized as SEG goals. However, it should be noted that acquiring benefits is still the top priority of companies' operation and management, while environmental protection is featured to be public good, which indicates larger investment and fewer exclusive benefits for companies themselves. Within the context, government supports become important resources supporting companies' efforts in environmental protection, inspired by the new support. Public policies supporting companies' efforts in environmental protection and sustainable development can be categorized into two sections. The first section refers to financial supports policies in forms of subsidiaries and bonds. For instance, by means of collaborating with financial institutions, companies can enjoy subsidized loans for sustainable development with lower interests and longer terms. The second section refers to tax policies. On the one hand, environment tax can be levied on companies that have emitted greenhouse gases overly. On the other hand, for companies accomplishing technology improvements successfully, tax reduction can be enjoyed. In this way, can balances among environmental protection, increasing revenues, and economic growth be achieved.
In order to move to a nature positive business model with low emissions, biodiversity, and renewable agriculture practices, Silver Fern Farms focuses on facility-related goals, which is related to the company's funding considerations. The meat prices hit a low in 2020, and as feed costs rise, so will meat prices. In addition to the higher cost of the feed, other inputs in the meat supply chain will also become more expensive, including packaging and transportation. As supply chains stabilize, so will prices. However, land prices are on an upward trend as New Zealand's exports are constrained by the profitability of forestry and increased forage costs due to the competition from the beef and the dairy industries. Therefore, it seems that Silver Fern Farms may be in for a funding challenge in its quest to become the world's most sustainable grass-fed red meat company. Sustainability-linked loans aim to promote and support environmentally and socially sustainable economic activity and growth by providing guidelines that capture the essential characteristics of lending and promote the development and integrity of sustainable development-related lending projects. The SLPLP are developed by a working group comprising representatives of the major financial institutions active in the global syndicated loan market. There is a consortium of loans from cooperative banks in Australia, New Zealand, China, the Netherlands, and other countries to provide funds for silver fern farms, which is in line with the SLLP. According to the SLLP, the borrower of sustainable development-related loan will need to explain the rationale and the motivation for the key performance indicators chosen by the company. Hence, it requires the company to build comprehensive sustainable goals, including waste landfills, greenhouse gas emissions, and water for processing.
This part is about law. Slavery Farm Farms signed the largest transaction linking working capital with sustainable development goals in New Zealand. The Resources Management Act, promulgated by New Zealand, states that there is a single overall goal, which is to promote the sustainable management of natural and material resources. In this bill, sustainable management refers to the management of the use, development, and protection of natural and material resources in a certain way or speed, so that people and communities can provide their social, economic, and cultural well-being, and provide security for their lives. In this new case we choose, it was right that Slavery Farm Farms is accelerating the realization of a business mood beneficial to nature, which encourages low emissions, biodiversity, and regenerative agricultural practice. Therefore, we believe that after the government has formulated relevant politics, we will promote Slavery Farm Farms to strive to achieve the goals set by the government. At the same time, Slavery Farm Farms think the deal to link working capital with sustainable development goals. In this way, we can not only develop towards the goals set by the government, but also get financial assistance on the way. So, with financial incentives, the development pressure of Slavery Farm Farms will be reduced. This means that the incentives to operate in a more sustainable way are very practical in the commercial sense.
In general, we can see that the politicals has a great influence on the company. For example, when Slavery Farm Farms accomplish its sustainability goals, they may be supported by a financial support policy in the form of bonuses, specialized loans with lower interest rate and long terms, and reduced tax. This could be a great help to Slavery Farm Farms, which is already facing the threat of raising costs, and thus it certainly shows the influence of political factors in STPP on the company. That's all. Thank you for listening.